I've been experimenting with something called a divergence tool in Ensign. Give you an idea, I'll show you how it's set up in a minute, but here was a nice divergence with a higher high and a lower high on the indicator. Price fell from 1063.50 to 1061 all the way down to less than 1060, about a 3 point move. And then we see another divergence where we've got a slightly rising ergodic and a much lower price. And this one ran, and we got a little dipsy doodle here. We got another divergence here. I'm not sure I would have taken that just based on the way the ergodics look, but this one ran from 1060 and a quarter all the way up to 1064. Now, they don't always work, because here is one as the ergodic has slipped under its long-term ergodic. We've got a pretty strong retracement, but the way I would use this when we're above the moving average is the fact that it is more or less a continuation divergence. Now, there are ways that we can change these settings, and let me show you what the settings were that I've been using. It's something you can experiment with. Now, these settings were based on fiddling around with this threshold number. My custom data point is basically the ergodic. It's using the ergodic value, okay? And you have to put it on the same sub-window, which is sub-window 4 for where your ergodic indicators. Now, you can do regular, hidden, or trend. I'm going to add the trend and the hidden divergence right now. Say OK. And then I'm going to stop this, see if I can find a section. I've been using the 333. You may or may not find this handy. A couple of people ask for it, so I'm going to back up and take a look. Now, I am going to have to do a little more research on this trend area. I'm going to remove this right now because it got a little confusing to me too, so hang on just a second. All right, now here's an interesting thing to help you. This is a continuation trend, okay? In other words, it's going to continue going up. And what it does, it calculates directly to the latest trend. You get a pesavento bar, might be an additional indicator you may want to use to show the price is going to continue to go up. It doesn't show you when to get out, but when you do get a reversal divergence here, higher high on the indicator, lower high on the indicator, or on the higher high on the price, I'm sorry, lower high on the indicator, it's something that might be very useful. This was a move when it started at 60.50 and ran to 64. Now, that's a pretty nice move, 3 to 4 points. It's an additional indicator that you may want to use. Now, there are always going to be times when you get confusion, you have losing indicators. Here's one with a lower low and a higher low on the indicator that says the price should drop or should go up, and it actually failed. Okay, here's another one where you get a little tiny move, then a bigger move. So you've got to be cautious when you use these. I would use them as secondary indicators. Here's where we are now. Let me expand this a little bit. I was just trying to play this one, a second one, where I got in short here before this bent over, and it didn't go very far. It went from 66 to back to the moving average. When you get a big trend like this and the moving averages are expanding, you basically want to stay with the trend, and especially when we got a higher high. This is the way I would look at it on the ergodic divergence. Now, hang on a second. One thing I've noticed is these little small divergences like this don't show up very well. So you're going to just have to experiment with things.